everyone. Welcome to the KE Report, another daily editorial on Tuesday, September 2nd. We are focusing on the move in the precious metals stocks, really big picture comments here on undoubtedly what is a bull market. Now, everyone has their own opinion on what stage or how early or how late we are in this bull market. Fact of the matter is, we're in a bull market. I think that's what matters, not so much people saying what inning we're in, because quite frankly, no one knows what inning we're in. But right now, we can address the facts that stocks are moving on good news. Stocks are moving on what I would consider neutral news. And we're even seeing stocks move on financing and share consolidation moves. So a lot of positive aspects out there. And it's not just sector leaders right now. There is a lot of juniors and companies that haven't really had that much news out also joining into this general revaluation in the sector. But most importantly, I think right now we're also seeing the precious metals follow through and break out. We're chatting with Dave Erfle. Dave is the founder and editor of the Junior Miner Junky. Dave, we're starting off September with a breakout in gold, a breakout in silver, and a follow-through breakout in the ETFs, the gold mining and silver mining ETFs. What do you take away from the start of September?
Yeah, it's fantastic, right? I mean, we had a summer that is normally summer doldrums, right? And it was for the gold price, right? I mean, we had the gold price run up to 3,500 about 5 months ago, and while the gold price was trading sideways, the gold stocks began to catch up in a big way. And then when gold broke out of that symmetrical triangle last week, that 5 month symmetrical triangle last week to the upside, the higher risk juniors really started to move. A lot of the quality companies that I own and follow, they were breaking out of these huge bases, and they were really starting to outperform the miners on a massive scale. So that's what you see when the bull market gets really going. You start to see the higher risk juniors take the lead, and the SILJ is pretty much the poster child for the higher risk juniors, because SILJ is the junior silver stocks and they're super high risk. And if you take a look at the SILJ chart, it only goes back to where it was started in 2013. It's now very close to reaching its all-time high, and it's reached its all-time high with soaring volume. And if you take a look at, in comparison, you take a look at the GDX, which has finally now reached its all-time high, reached back in 2011. That volume is decreasing. So now, and that was happening during the slow summer months. So now we got everybody back from their starting to come back from their vacations now, and what do they see? They see the stock market rolling over, the stock market, which is priced to perfection, starting to roll over. And they take a look at the S&P 500, which was, it had been making all-time highs. It's starting to roll over. And the biggest gainer in the S&P 500 is Newmont, which is the only gold stock in the S&P 500. It's nearly doubled, and it's the largest gainer in the of the S&P 500. So you're coming back from, your vacation, you're a fund manager, you're a big money trader, and you see the stock market rolling over. And if you don't have very much exposure to gold stocks, or if you don't have any exposure to gold stocks, you take a look at Newmont being the biggest gainer for the year, and gold's breaking out yet again above 3,500 now, and that logarithmic target of that breakout is 3850 to 400, and that's also the symmetrical triangle breakout target. I wouldn't be surprised if it gets there pretty quickly. And we also had the gold miners predicting this breakout. So it's all happening now on the bull side of the ledger for long suffering gold bulls over the past few years. This has been a stellar year already, and we're only in the ninth month.
Yeah, we really have a perfect storm of factors all stacking up as you laid out, from the equities starting to roll over a little bit, breakouts across the board. I want to have you put your technical hat on and just talk about the significance of what happened on Friday. It was not just the end of the week, it was also the end of the month, and we saw the highest close ever in gold, all-time high. So on the daily, weekly, monthly, we saw that happen in some of individual equities. With silver, we saw the highest 52. It was a 52-week high on the daily, weekly, monthly. It's still not above
14-year
50.
high. Yeah.
Yeah, so it's still a huge move, but it happening across multiple time frames, daily, weekly, monthly. Same thing on the ETFs, a lot of breakouts. So When that kind of thing happens across the board, across multiple time frames, does that mean there's a lot of longevity to this move? Is the breakout more profound, or how do you read that technically, Dave?
Oh, absolutely. That's momentum traders seeing that, and they're seeing this, and they're getting into the market even bigger if they're not already in. And momentum traders have been into this sector for a while. And when you see breakouts on a daily, weekly, monthly basis at the same time, that really gets the juices flowing in momentum traders, and that's what we're seeing right out of the gate here in the first trading day of the month of September. And I've always pointed this out to my subscribers that the gold always has these huge moves on the first trading day of the month in either direction. And since it was a major breakout of that 5-month symmetrical triangle, see, gold's been consolidating in multiple symmetrical triangles since it broke out of that 13-year cup and handle pattern, immensely bullish technical pattern. And like I said, the target is 4,000, and I've been saying that by the end of the year, if the gold price breaks out of this symmetrical triangle, especially if it gets extended, it's going to hit that 4,000 target. And like I said, the miners were predicting that because they were leading. Miners were breaking out, and before they broke out, they were in a running correction. The miners have been technically overbought for a while. And people that have been playing in this mining sector sandbox for the past several years we're used to having surprises to the downside. But now that we're in a bull market, all these surprises have been to the upside. So a lot of people sold too soon. A lot of people even got out of the market completely, thinking, I received several emails back, several months ago, that they expected the stock market to take this big dump back in April. Everybody was worried that the gold stocks were gonna get hit, but we had a huge fake out move in the gold stocks, which we typically see many times in both directions. We see these fake out moves that get people out of position and sell the least opportune time, and unfortunately, that happened with a lot of people. But I believe there's still even though we're technically overbought on so many different levels in gold stocks, in gold. I mean, the monthly RSI in gold has been over 80 for several months, and now it's gotten up above 80 in the GDX for the first time in its short history. Even though we are seeing these massively overbought levels, we could have sideways corrections for a while because there's still plenty of money on the sidelines, like I mentioned earlier, that want to get into this sector.
It's bull market action, right? Overbought is a function of being in a bull market. But let's dive down into maybe what you're doing in your portfolio or more on the equities, because as I said on the intro, we're seeing stocks move up after financings are announced, even financings that are discounts to market. Usually stocks correct to that financing price. That's not happening. Even share consolidations are moving stocks higher. It really seems to be this environment where all news is taken as good news. Even visuals of drill results are popping stocks. We've been in this environment before. It hasn't usually lasted long, but again, we haven't had I don't think, a bull market for the equities that has even been this sustainable now a year and a half through, at least from the major breakout last March in 2024. What do you look for within news flow? Because news flow right now is good. It seems like no matter what comes out. So within your portfolio, what are you focusing on news flow wise?
Yeah, I mean, it's because we're, like you said, we're in a full-blown bull market now. So you could flip everything as far as what was happening during the bear market positive, right? I mean, pretty much all news was being sold in juniors, over the last couple of years before 2025, good or bad. I mean, investors were using news flow as liquidity events to sell things, no matter if it was good news or bad news. And financings, even if they were even if a company was fortunate enough to raise at a premium to market or even at market and without a warrant, those financings were being sold. Now you flip that to financings are being bought, even if they're at a discount to market and even if they contain a half or a full warrant, which very few are having to attach warrants now. But as far as you're asking me what to look for as far as news flow is concerned, I mean, you still want to base your buying on positive news flow eventually, but I'm really not buying here. I've been in sell mode as far as trimming some positions over the past few months. I have sell strategies for each stock that I buy. I mean, that's the main thing you have to do. You have to have a sell strategy. So, a lot of these stocks are reaching a point where I'm going to start trimming, and some of them already have, and some others are getting very close. So I'm building up a little bit of cash in my portfolio right now to where when we do have this correction that inevitably will happen, I'm going to look for things to look for one stock to add to the portfolio that is higher risk, that is yet to that still has a lot of upside, because a lot of these companies, a lot of these juniors, you look at their charts, they've moved quite a bit, and the last thing you want to do to enter when you want to enter a position is chase something. It's tougher to find companies now that are under the radar, but they are out there.
Well, Dave, I'm glad you went here because I think one of the most fascinating topics for investing is not when to buy. There's a lot of times you can buy, you can average in, you can buy dips, you can buy pullbacks to certain technical levels, but I think investors struggle a lot more with when to sell or when to rotate positions. So,
Absolutely.
to the point you were just making, I mean, I'd love you to put a little more color on it. Like, do you get a stock to a certain percentage and then you sell it there? Is there obviously a takeout's a different scenario, but if there's not a catalyst like that, if it's a technical level, are there things you do to say, hey, I really need to lighten this one? Or do you open up more positions, like you're saying earlier stage, and saying, hey, this sector, this, like maybe the producers have run, but the explorers haven't. So do you rotate sector? So maybe a little more color around when to sell and rotate.
Right. Yeah. I mean, first of all, in my newsletter, I've told my subscribers flat out, and it's also on my website, that I'm not going to invest in anything unless I see at least three times upside. And of course, I'd like to get into something that has at least 10 times upside, but the three times upside is the key. If it doesn't have three times upside, at least for over the next 2 or 3 years, I'm not going to get into it. So I use that three times upside as a sell point to trim one third of my position to get my to get my original investment capital out. So then I hold the rest for a potential buyout, because that's the ultimate goal whenever you buy a junior, is for it to get taken over by a major at much higher prices. And so if I've got a triple, fantastic. I'll go ahead and take a third out. I've got my investment capital. So now I have a risk-free position, and risk-free positions are much easier to hold when there's eventually a correction after the stock has really taken a run, or if the stock gets taken out even higher without a correction, that's fine too. So that is my rule of thumb as far as trimming initially trimming a position. But if a position continues to run and it gets so large that it's over 15% of the entire portfolio, I'll trim it again. So I don't want to have a position get too large in the portfolio either, because you don't want one position to be too much of your portfolio.
Dave, I want to follow up on something you said in our last interview where, look, as much as we had talked about sector leadership, you were also admitting, as well as us pointing out, that the earlier stage companies are also running, some even on no news. But the fact of the matter is, we are seeing this rising tide, and you made the comment that you're looking for earlier stage, higher risk companies. I didn't have a chance to follow up with you on that. So, what do you look for in these earlier stage, higher risk companies? How far down the food chain are you going for? What sort of characteristics catch your eye?
Yeah, the lowest I'm going now is they must have an initial resource, and they must be working towards a PEA. I won't go down as far as discovery stage, or without without an MRE, without a resource. I won't go down that far just yet. But we are starting to see a lot of these companies take off now. I was able to get myself and my subscribers into three of them this year before they really started to take off. One I'm still accumulating. It is yet to take off. It's still flying below the radar, and it's a copper PEA stage junior. So that's what you want to look for. And it's like I said, it's very difficult now to find these companies that are flying below the radar of the market, but they are out there. And we're about to go to the Beaver Creek conference, and where all these companies are going to be you have a chance to sit down with all these companies and ask them the pertinent questions you need to know before you get into them. And that the conference this year is going to be taking place in a raging bull market, which we're not used to seeing at this conference, because usually we go to this conference and even if the sector's in an uptrend, the Beaver Creek conference kind of stops it, and then we have a downtrend afterwards. But now we're in an area where we're expecting a correction, and we're going into this conference, but we're in a rip roaring bull market, so it's really going to be interesting to see what the mood's going to be like, and what answers I get from these companies that I'm looking at right now on my watch list. Because I would like to add one more, but one more company. I'd like to start getting into one more company, but I'm going to wait for a correction in the sector first before I even consider it.
Well, Dave, I'm glad you brought up Beaver Creek because one, I'm worried that we're going into this in a raging bull market, but there is this propensity for the Beaver Creek curse afterwards. So I hope it doesn't mark a top. But it's a crazy conference in that you have like a speed dating aspect, and that you may have 10 to 15 meetings a day with all these different companies. And I find it's easy to fall in love in these speed dating situations because sometimes you'll hear a story and think, well, boy, that sounds pretty interesting. And then the next one, well, wow, that sounds pretty interesting. So leaving this kind of a conference, are you willing, and kind of following up on the last question, are you willing to trim some positions back to start new positions, maybe more than one? You go in with the goal of one. Would you start two or three if you saw the advantage now because of where we're at in the market?
Wow, it all depends on what I hear, but I'm looking at only one right now to get into, because I have 20 right now in the portfolio. And adding one more is what I'm looking at. But like you said, if I come across two companies that I really like and it's hard to make a decision, maybe I'll take a smaller position in two instead of a larger initial position in one. Absolutely, I might do that. But yeah, it's finally a bullish atmosphere going into this conference, and then obviously, we have the Denver Gold Forum afterwards, and even though M&A has gone quiet over the summer, I expect M&A to really pick up, because these are the two conferences where all these guys get together and they talk deals, and they're going into this conference, both Beaver Creek, the Denver Gold Forum, and they're starting to see these companies, these juniors that are de-risking these large projects that they'd like to get a hold of eventually. They're starting to see the share prices really move now. So I think all it's going to take is, maybe one major M&A deal announced, and then it's going to get the juices flowing, and then you'll probably have a few more. But what I'd really like to see is a bidding war for one. That would really get the juices flowing, and get the M&A action ramped up in this sector.
Absolutely, but all M&A I still think is good, and especially any M&A at these share prices. The majors have better equity prices. That gives them more ability to make deals. They have more cash. And quite frankly, with the precious metals prices still hanging up there, more investors are looking at this sector. We're actually seeing inflows into the stock ETFs like GDX and GDXJ. It's all positive, and now we're just waiting for a little bit more money to filter down. But so far, it has been on really the high class assets, at least into the larger companies, and the consolidation of some of these assets into the mid tiers. But hey, Dave, a lot for us to catch up on when we get to Beaver Creek next week. Looking forward to seeing you there, and looking forward to seeing what comes out of that conference. If you want to follow along with what Dave is buying, selling, and watching in the sector, click the link in the show notes to visit the Junior Miner Junky website. Dave, nice chatting with you today. Thanks for your time.
Thank you, guys. I look forward to seeing you next week.